Massive G5 level solar storm. In this video, I'm going to be breaking down why this is great news for the stock market, especially growth names, Bitcoin, gold, etc., crypto, by taking a look at also what is the solar cycle, why it's crescendoing right around now, and what that all means. I'm going to be doing a deep dive into the macro variables, so make sure to watch this entire video to see what's about to happen and why that all makes sense in terms of a bullish stock market story. So stick around. As you can see in this graph, by the letter R, recessions tend to occur just after the peak of the solar cycle. So with a medium time of a little over 4 years after the beginning or the bottom of a new solar cycle, that is when a recession typically will occur. So, as of this recording right now in May of 2024, we are right at the average amount of time for a recession to occur. Now, that doesn't specifically mean that is what is going to trigger a recession, but there's a lot of very important data points I'll cover in the other slides that show why there is a high likelihood that one is coming right around the corner, but at the same time, why this is beneficial to the stock market right now. So I'll cover more on that, especially in the section called macro cycles, which are coming up just in a little bit. Now, let's take a look at some other key macro variables. So currently money supply, which is an important driver of inflation, is down 0.29% on a year over year basis. And inflation, core inflation, is up 3.8% on a year over year basis as well. Now, although this number is higher than desired for inflation, it is also counteracted, as you can see by this relationship in the graph, with a negative money supply growth, which is good for keeping short-term inflationary pressure down, although that is not going to be the case in the long term. I'll talk a little bit more about that in just a moment. Now, continued unemployment claims, which measures rising unemployment levels, is up 32% from the economic cycle floor in June of 2022. And this number is very high. At these levels, a recession, now going back to a little bit to the solar cycle as another triangulated data point, has occurred within 1 year due to a weak economy that is prone to shocks, right? And solar cycles, especially very strong solar storms, could bring some of those very unusual shocks. So I'll talk about that too in just a moment. So there's a lot of potential shocks out there, geopolitical, solar in nature as well, that could tip a already weakened economy over into a recession. But not every recession is very negative for the stock market. So I'll conclude all of that in just a moment. Moving ahead. So currently we are in year 2 of the market discount cycle. So every 3 to 4 years, the stock market performs poorly due to an alignment of monetary and fiscal policy with the political cycle to address key economic issues. So even though a recession is possible, and there's a lot of data points supporting that right now, the discount cycle dictates that it's unlikely that restrictive monetary and fiscal policy will be allowed, which would negatively impact the stock market. Now, moving ahead, before I dive into how this is going to affect the stock market as a whole and some key opportunities there, let's take a look at the big picture. The stock market can be categorized as falling under a good year, and that is a big reason for it being in the year 2 portion of the market discount cycle. And it's important to understand that because the market discount cycle shows that if you were to follow the strategy on the previous table, which involves categorizing and investing around the predicted direction of the stock market by leveraging the market discount cycle, you would be $1 million better off in this 15-year example of a growth of $100,000. So that's why it's important to understand what are those key macro variables going, but also understanding what some of those wildcard events like a solar cycle or a solar storm happening could impact the stock market. But more on that coming up right here. So when we take a look at the major cycles, this is what I'm talking about in terms of wildcard events. So major world-changing domestic and international conflicts follow a cycle that begins approximately every 84 and 248 years. The theory around that is that astrological alignments cause predictable patterns of human behavior in the same way that tides are impacted by the moon. Right now, we are at year 83 and 248 on the major cycle, which means we are about to enter into a major conflict period, which coincides with some of those potential shocks that are wildcard events. Now, it's important, especially, to know about major cycles because they can bring about said wildcard events that can make the impacts to the stock market completely unprecedented, right? Or have never been seen before as well, both on the upside and the downside. Now, we need to take this into context in terms of the market valuation. So currently the stock market is considered overvalued, which means that it's poised for a bigger than normal drop during the market discount cycle. So right now we're at a 27.5 average PE blended, and that is much higher than that 21.5 benchmark where we seem to kind of tail off at before recovering from. So bigger than normal drops when negative shocks occur. And then ultimately, monetary policy is currently favorable to the stock market as interest rates should remain about the same or decrease should any shocks occur. And that's important, right? That is positive momentum for the stock market if monetary policy becomes more stimulative. And fiscal policy is also favorable as we continue to have strong government spending. And should any shocks occur to the system, and I'll cover that in just a moment, that should only increase as well. Before I give my prediction on what this means for the stock market, if you want to get stock rankings to find the very best opportunities and macro analysis so you can see how things are transpiring between different asset classes, go ahead and click the button down below for that link. Now let's break down what this all means. The macro environment right now is very favorable for stock growth. We know that. And this is also especially true for some other names as well, like some great growth names or gold, Bitcoin, etc. Now, in the short term, based on our position in the market discount cycle and any kind of negative event that a solar flare or a solar storm might inflict upon power grids or infrastructure, this pushes downward pressure on both monetary policy and upward pressure on fiscal policy, so more of a stimulative environment. However, as we're moving towards the apex of the solar cycle, that all gets a little bit funky when we take a look at both the market discount cycle that's coming down the road and also the 84-year and 248-year cycle that's intersecting as well. So it's really important to note that although what is temporarily stimulative, should it continue to occur, and there's a big chance that that apex of the solar cycle will be moving towards an intersection around 2025, 2026. That is one of those scenarios where there could be some asymmetric downside black swan wildcard events that could impact the stock market and those individual names as a whole. So you definitely want to stick around for those videos around that. But at the short term, this is a very bullish situation for the stock market because it's downward pressure on some of those very hesitant to move things such as monetary policy and fiscal spending. That's all for this video. Make sure to subscribe to the channel if you want to see daily videos or more macro updates, and I'll see you guys on the next video.